Is this the beginning of the end for Wells Fargo? Did you know that Wells Fargo just announced that it will be closing all of its personal lines of credit across the country? This is not good news, especially if you were relying on that line of credit to run your business. In this video, I will discuss why Wells Fargo is doing this, what does it mean for the economy, and especially what does it mean for your business. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business coach, commercial broker and lender, helping you scale your business and increase your wealth. If you are ready to scale your business to 7 figures and beyond while creating the financial freedom and the lifestyle you want, then subscribe to my channel and don't forget to hit the bell and you'll be notified every Thursday when I have a new video coming out.
So if you look at the news here, I'm going to go over 3 different articles that just the last basically couple of weeks, so we're going to answer those 3 questions right now, which is why Wells Fargo is doing this, what does it mean for the economy, and why should you be concerned as a business owner, especially if you're a small business owner. So question number 1, why is Wells Fargo doing this? The truth is they got caught on a scam. See, this is important. The news comes more than 4 years after the scandal. Remember that scandal back in 2018, as well as forcing customers to pay for unneeded auto insurance, opening fake accounts. They got their hands slapped. Basically very unbecoming, just unethical, immoral, and bad business. So in 2018, the central bank imposed a cap on their assets. This was not random. This has been going on, been in the making for a few years. So Wells Fargo saw this coming, and it's bad. I mean, because you're paying the price. So they're saying that not a single Wells Fargo customer will see the credit suffer because of the bank's restructuring. Right? The reality is you should expect your credit score to drop if you had a credit line, a personal credit line with Wells Fargo.
If this content resonates with you, please like, comment, and share. It really helps the YouTube algorithm for my channel if you do that, and thank you so much for those who already do that.
Okay, so let's go to this other article right here. So here, this is a CNBC. This is as of July 8th, so basically a week ago. The bank is shutting down all existing personal lines of credit in the coming weeks and no longer offers the product. Okay, well, we know that. The revolving credit lines would typically let users borrow $300,000 to $100,000, were pitched as a way to consolidate higher interest credit card debt, pay for homeowner renovations, or overdraft in checking accounts. Now, I speak to business owners. Now, although I do feel bad for the retail customers that we're using it for personal use. But if you are a business owner and if you had this line of credit, say for $100,000, that you were using to meet payment from time to time, then you're in a world of trouble. You should not, I help people, clients build their corporate credit. You should not be relying on your own personal credit to build your business. That's what you should have, a sole and separate business credit profile based on your EIN, on your legal entity, whether an S Corp or an LLC. If you had a business credit line account, those are not affected, only the personal ones. So it's important to you that there's a distinction that you should not be building business credit with your personal credit profile. So you should not be using personal lines of credit to run your business.
If you are a startup or a small business owner looking to scale but don't know quite how to raise the capital you need for your business or how to position your business so you can get the corporate credit with access to hundreds of thousands of dollars for working capital, then I can help you. I'm on a quest to help 10,000 small business owners do just that and more. Email me directly. My email address will be below, and I love to help you.
If you are a sole proprietor and you're using your social security number to grow your business, then your credit score will be negatively impacted, which means your ability to borrow money in the future should be affected. So this is number 1 reason that you should be building business credit, relying on your EIN, not on your SSN. So Wells Fargo warned customers that the account closure may have an impact on your credit score. the thing is, the truth, the reality is that it is not may have an impact. It will definitely have an impact. Now, there are cutoffs on the credit scores, the 680, 700, 720 cutoffs. If you were borderline 680 and use the minimum credit to apply for AAA credit, those nicer loans, whether you're refinancing your property and you need it to be a 680, and because of this line of this credit line closure, if you had a Wells Fargo account, expect that to drop. So it's going to hurt interest rates on whatever other loan you get. So you just need to know that going in, and that should make you very, very angry. So they were up to 100,000. What they said is Wells Fargo recently reviewed its product offers and decided to discontinue this personal. The bank is gonna. It says the bank. The political. The spin is that the bank is gonna focus more on the credit cards and personal loans. That's baloney. That is true. It's because they got caught with scamming people, try to grow unethically. So this other article, just want you to see that this is all over the news, and it matters because my focus is the business clients, and I know personally of business clients who are struggling with this, who I've been telling for years, you need to build your business credit, not your personal credit. So now there you have it. It's the beginning. Now, the questions that we were asking ourselves is, how is it gonna, Wells Fargo, why is Wells Fargo doing this? It's because they got caught being a part of a scam. What does it mean for the economy? It will have a ripple effect, right? Now, at the outset, it's gonna benefit some of the other banks like Citibank, Chase, and Bank of America, but it will have a ripple effect because the lesser access consumers have to credit, the more the economy suffers. There's lesser spending, right? If it has enough of a cooling period, it can have a ripple effect. I don't know what's gonna happen yet, but it could. Now, and where can you go if you had a Wells Fargo line of credit? Where do you go from here? So what I would suggest is that you start building your business credit profile, and you should start going, Chase has great credit products right now, business credit products that you should be looking at. Also, Bank of America and Citibank, they all have great products, but you should also look into the American Express corporate products. You should be looking at all of this credit lines that have nothing to do with your personal credit score and all to do with your EIN. Hopefully this video helps us, and there is help on the way. If you have any questions, feel free to reach out to me.
For a limited time, I am giving away 2 of my biggest resources, my Advanced Growth Plan template, as well as my Financial Projections Workbook. These 2 documents together have helped hundreds of business owners predict and achieve financial success in their business. Go ahead and click on the link below. They are my gift to you.